It's the predatory lending practices. It's the deception. A consumer can dig themselves into a hole they cannot get out of.
They are called auto title loans, and some consumer advocates say they target people just trying to get by. A new federal consumer bureau, which officially opened today, says regulating these kinds of loans is on their agenda.
ABC 15 investigator Joe Ducey reveals what you need to know before signing a loan, which could put you even further into debt.
If I screw up again, I'm done.
Jessica Gibbons of Mesa is like a lot of young people in the Valley, in her 20s, just starting out, and she got behind in her bills.
I needed to pay my rent, and I didn't want to ask my family for help anymore. I was trying to solve my own problem this time.
So Jessica decided to take out a loan, not just any loan, a title loan for $2,500 using her car, a 2010 Chevrolet Aveo, as collateral.
I've grown up knowing don't do it, but I was desperate and I needed the money.
It's quick, easy. In most cases, they verify employment, have you sign over your car, and sign the contract. Usually takes about 15 minutes. After about 4 months, Jessica started falling behind on the payments. She wasn't paying them in full. The company that gave her the loan took her car. She immediately called her grandmother.
She called me on the phone in tears because her car was being towed away. I believe her words were, "You're going to kill me, Grandma."
That title loan Jessica got had an interest rate of not 8 or 12%, not even 20%. The interest rate was 156%, and it's totally legal in this state. So that $2,500 loan cost Jessica more than $5,000 to pay off the loan and get her car back. It could have cost her a lot more if she didn't own her car outright. Only 20 states even offer title loans, and Arizona is the only state that allows consumers to get a title loan even if they don't own their car. So if you fall behind and your car gets repossessed, not only do you have to pay your monthly car payment, you have to pay your monthly title loan payment too. That's according to the Arizona Consumer Council. Tanya Norwood is the executive director.
That's outrageous. That is a great example of predatory lending.
Backers of title loans say they allow some people to get loans they couldn't otherwise get. The number of title loan businesses increased last year after the state decided to stop payday lenders from doing business in Arizona. More than 250 of those payday lenders became title loan companies.
They were looking for alternative ways to still bring in the income and still maintain their client base.
While payday loan rates were called outrageous by consumer advocates up to 400%, title lenders can still charge up to 204%, which Norwood also calls predatory.
The lender puts the consumer in a position where they are not able to ever pay that loan off.
Some places advertise as offering fast loans, instant IRS refunds, or secured debit cards. But we read the fine print. They are title loan companies. Today, there are more than 1,000 licensed in Arizona. The ABC 15 investigators took each location of a licensed title loan business and plotted them on a map. We found high concentrations in areas with high poverty rates, according to the most recent census data. Like this cluster of nearly 20 locations along a 1-mile stretch of East Van Buren between Interstate 10 and 7th Street.
I think their very existence is preying on anybody who finds himself in difficult financial circumstances, who doesn't think they have any place else to go.
Title loans are regulated differently in each state, but beginning today, the new Federal Consumer Financial Protection Bureau officially opens, and those in charge have said policing non-bank loans like title loans will be a crucial piece of the Bureau's business. Now, to contact them and to see locations of title loan companies statewide, go to abc15.com/investigators. I'm investigator Joe Ducey, ABC 15 News.